Hi everyone, welcome to the audit and attestation class. In this class of assessing risk and developing the planned response to those assessed risks, we'll be covering four major things. First one is discussion with audit team regarding the fraud. Second one, inquiry regarding the fraud. And third one is assessing the fraud risk on other engagement as well. And then after, we'll be covering some practice questions. So let's dive into for more detail. So now we discuss about type of fraud, right? Now, next thing is in audit. When you are conducting an audit, what all consideration you need to give for the fraud risk? The most important thing is discussion with the audit team regarding the fraud. So whenever you have internal team meeting of the audit, so whenever engagement partner, executive director, manager, senior manager and other team members will be meeting for the planning or for the execution, for the review purpose or for the finalization purpose, they must discuss the fraud risk. That's a mandatory discussion required in all the audit internals meeting. Right? So there are certain mandatory procedures which an auditor need to perform when they identify the risk of fraud. So mandatory process to perform and involvement of engaging partners and executive team planning meeting. Like in all the audit, generally we do team planning meeting, right? And then we also do like recurring team meetings also for the status update. And then if we are doing interim audit, then we conduct interim audit, and after that we do post interim event, right? And once we complete the audit or maybe about to complete the audit, then also we do a conclusion meeting within the team. So in all those meetings, fraud discussion is something mandatory topic or mandatory agenda item should be there, right? So what discussion you will be doing? So you have kept that agenda, but what need to be discussed, right? So these are A to H points are required to be discussed. First is known internal or external factor that affecting incentive, opportunity, rationalization to commit the fraud based on like partners or director, manager, senior manager understanding what are the area could be possible of the risk of fraud and why those areas been considered as a risk of fraud. Second is maintaining the professional skepticism and questioning mind, right? So it's a partner responsibility to communicate in those meetings that all of you must maintain professional skepticism and the questioning mind throughout the audit. Third is risk of management overriding of control. So whatever the risk of management overriding of control has been identified or suspected need to be discussed there. Fourth is unusual accounting procedures used by the client. So based on like, for example, now you have done the planning meeting and you are executing it, right? After the interim audit, you guys are meeting for a post-interim event. In that, when you have conducted the audit, right, some of you might have identified certain unusual transaction, right? What are the controls over there? So you will be discussing those as well in the post-interim event or in your internal meeting. Important controls and systems around the fraud risk, materiality at the financial statement level and account level, and how the auditor might be responding to the suspectability of material misstatement due to fraud. So for example, so I'll share one example which I've been through for the fraud risk. I was doing an audit for a electronic company who manufacture like air conditions, right? Who was like real estate. Sorry, it was a real estate company who are working on different projects, right? So at that point of time, I was senior in the audit firm. So I had done like analysis of how much material has been issued to particular project compared to how much is the total project cost and project revenue. Then I was doing analysis of transportation expense. Sorry, my bad. So I was doing analysis of transportation expense. So what I was doing, I was analyzing how much is the transportation expense to the total project cost for the individual project. Let's say company have 500, let's say 50 projects on which that company is working. So on an average, I was seeing like 2% to 3% is the transportation cost to the total material supply cost. Right, that so it was making sense to me in each project which is coming in a range of 2 to 3%. I was feeling okay, but in one project I have seen like 400% is the transportation expense compared to the material supply. It immediately woken up my eyes and ears. I said, no, there is something wrong. Then further I dig it into, I have seen like project was completed 1.5 years ago. But now the company is paying these licensing expenses as a transportation cost and fudging fake bills. And we identify the fraud and we qualified our audit for that, right? So these kind of things maybe will be more, you need to apply more professional skepticism when you're performing the audit. In a small transportation expense, even the finance controller have not imagined like somebody can catch catch that kind of fraud, right? So these things all like you need to keep in mind, like wherever you see like suspectability of fraud, there I suspect the fraud, like transportation cost 400% of the material supply, right? It's a suspicion, I have got it, but maybe there might be like genuine things, but when I dig into it, I got to know like it was actual fraud. But there might be position, there might be possibility like transporter might have sent the bill later and company has booked late. So then it's an error, not a fraud. Because like they have missed to book the transportation cost earlier. So it would be just a prior period expenses, right? Would not be a fraud. But here when I got to know these are fake bills. So it's all about intent, absolutely, right?
All these steps and these factors,
yeah,
these would be common for both non-issuer and issuer.
Yes, absolutely. Fraud risk for everyone.
I mean, within relevant rules.
Yes. Yes, absolutely true. Right, everyone on same page? Suspectability of fraud. Understood?
Yes, sir.
Yes, sir.
Okay, so communication among the audit team member throughout the audit. So for example, I was doing audit of transportation costs. It's been my responsibility to communicate to the all team member. Like I'm suspecting certain fraud. It's been my responsibility to communicate to manager. Right? Manager may have different view, partner may have different view. So communication need to be passed through so that there might be possibility that fraud in revenue recognition as well. There might be possibility that, because like if you are booking transportation costs on any project, and projects are generally on percentage of completion basis, that means your profit is wrong, your revenue is wrong, your cost of goods is also wrong. So for example, I am doing audit of transportation cost and Ayush is doing audit of revenue and Kashish is doing audit of COGS. Then it's being my responsibility. I found this mistake, I found this fraud. Then your revenue is also inflated and your COGS is also inflated, right? So it's been my responsibility to communicate this thing on timely basis to all other team members and discuss internally among the team leaders before jumping onto the client side. So I've seen like couple of auditor, young auditor, they feel like now I found it, I'll nailed it, right? And they reach out to the controller, this is what your employee is doing. And then it comes as a backfire on them. Right? I've seen like a lot of my team member also, like when I was like manager with EY India country practice, I've seen like one young staff or young seniors, they want like, no, now I found it something good, I'll go directly to the finance controller. I'll not inform to my manager and not discuss with my manager. He'll say, take it easy. We'll go, and then like finance controller came back to us, what your staff is saying. It's not making sense. So it's been good, always being recommended to discuss internally with your audit team and your audit partner first before jumping onto the head of client, because these are sensitive matters.
There's a lot of times you see that, I mean, as you mentioned, that there might be a backstory to it.
Yes.
Aware. maybe we are asking the repeated question which the other team members already touched on.
Yes. Yes, and these are very sensitive matter. You cannot directly jump into the head of client. Discuss internally with all your senior team member and then accordingly take a team decision. Okay, document the discussion. Work not documented. Work not. Kya hua Kashish? Ayush, Nimisha. No response.
Work not documented is work not done.
You're missing chole bhature.
वही पर मैं वही सोचे जा रहा हूँ ना, तो उससे दिमाग चल नहीं रहा।
शुक्र है हमने लस्सी नहीं पी।
सर फिर तो नींद आ जानी थी, आप भी क्लास नहीं ले पाते।
Cool. Okay, next is, so far we understand what is fraud risk. We understand what internally we need to discuss. Next thing is what we need to discuss with management. Inquiry with the management regarding fraud. There are certain mandatory procedures you need to do in each audit, whether it's for issuer or it's for non-issuer, right? So first is whether management has knowledge of any fraud or suspected fraud. This inquiry you will be making to the management, whether you are aware of any fraud or suspected fraud or not. The answer is all the time we know, but as an auditor, it's our responsibility to ask, right? Right. Second is whether management is aware of any allegation of fraud or suspected fraud. You know what is the difference between first and second point?
Management knows how to do fraud. Like there's something that has already happened. The second one is maybe somebody is using, let's say, the hotline number, or somebody has informed them about the potential fraud.
Yeah, absolutely true. So whether they come to know from any employee through hotline number, whistleblower policy, right, or maybe any supplier has complained, any customer has complained, right? Whether they are aware of any fraud, you know, like for example, like any car dealer, right? An individual has went and purchased the car, but the car dealer has not given like basic accessories which should be part of the car, right? So he is embezzling those inventory, and then customer has raised a complaint to you. So whether you are aware of any such fraud, like this dealer is doing this kind of embezzlement of inventory or misappropriation of the inventory, right?
So whistleblower is allegation.
Yeah, it can be like complaint, it can be allegation, it can be like legal suit, or it can be hotline, or it can be through whistleblower, any mode.
So management has knowledge of fraud.
Where management already know.
That's fraud is committed.
Yes, right. And second is where it comes in the attention of management from any outside party, whether it's employee, supplier, customer, vendor, right?
Where they need to just assess that fraud has been committed.
Yes. Third is management understanding about the risk of fraud, including any specific fraud risk the entity has identified, an account balance, account class of transaction, or for which the risk of fraud may exist. So this is also mandatory inquiry you need to perform. You need to ask management whether you understand the fraud risk or not. Right? Next is programs and control established to mitigate the specific fraud risk. So you need to ask to the management what all controls you have put in place, what all programs you have put in place to mitigate those fraud risks. Right? For example, management will say we have code of conduct policy, we have code of ethics policy, we have supplier code of conduct, we have customer code of conduct, we have like whistleblower policy, right? Those all things you need to inquire with the management to gain an understanding what management is doing to reduce the risk of fraud from the management side. For example, like if an employee or customer or supplier is doing fraud with the management, that means they are losing their business, right? It's a bigger threat for them to survive rather than to the auditor. Like auditor at the max will qualify, but for them, they're losing their business, right? Sometimes it's difficult for them to survive. Next is entity with entity with multiple location. For example, like any company has like their office in different location. For example, in US, you are in California, you are in Michigan, you are in Florida, and you are in like Europe, you are in London. So you have multiple locations. What all inquiry as an auditor we will be asking to the management when they have geographically different locations of operation. First is nature and extent of monitoring of operating locations, how they are monitoring those different location at a central level when they are consolidating the financial statement. Second is particular location or segment for which the risk of fraud may be more likely to exist. For example, if they have like let's say plant in Nigeria or plant in Senegal, plant in Tanzania, right, or maybe in Afghanistan or maybe Kazakhstan, so the risk, so the risk is high, right? Whereas if you have plant in USA, Canada, in Mexico is also risky, right? So that's also you need to understand and accordingly plan your audit procedure. Sixth is how management communicate its view on business practice and ethical behavior to its employees. Code of conduct, code of ethics, policies, and everyone need to sign up, so on and so forth. Next is how the entity internal controls serve to prevent and detect material misstatement due to fraud. So you need to understand what all control that management has put in place to prevent, detect, and correct the misstatement on account of fraud. Eighth is how audit committee oversight. This is also very important for the issuer, because the issuer have audit committee, non-issuer generally do not have, right? How the audit committee oversight its responsibility to mitigate the fraud risk. So what all activity that audit committee do to mitigate the fraud risk, to understand and identify the fraud risk. Ninth is inquiry with the internal auditor, whether he is aware of any fraud or suspected fraud. Same way how you are doing inquiry with the management, it's been your responsibility to do the inquiry with the internal auditor as well, right? Because they are working very closely with the management on different operational as well as financial domains. Next is interview employee at different level and employee involved in complex and unusual transactions. So sales head, marketing head, production head, so all those senior people, it's been your responsibility to do the inquiry procedure with them and ask them whether they are aware of any fraud or suspected fraud, or whether they are aware of allegation of fraud as well. So these two inquiry you need to do to the different heads as well and to the other employees if you feel it's being required.
And then if you do more for cooperative as well, what are your understanding on it?
No, in the fraud risk assessment, when you are when you identify the fraud in any area, let's say in sales area, you have considered like fraud risk is high, then you will be discussing with the sales head or marketing head, right? Make sense, everyone?
But in general audit also, when there's payment identified fraud, then also we will be interviewing the sales head.
Sorry, say that again.
In that, when they have identified that there is no fraud.
So more than 99% chances are that you will be identifying the fraud risk. It's only less than 1% chances you are saying there is no fraud risk in any audit, right? And there you need to justify why you have identified, why you have taking this stand, there is no fraud risk.
So example, we were working on one of the clients, another waste online chain. So for that, we do not have any fraud risk associated with cash, which generally is not released. Because usually you associate fraud risk with cash, right? But because their system was so much automated that they did not have any fraud risk associated with, and for that they had to do so much documentation.
In memo, yeah.
Easier to identify fraud.
Yeah. Same way like in sales and incentive, we generally consider like fraud risk is high, right? And we do like additional audit procedure to mitigate that fraud risk, which include like inquiry with the management as well as sales head, incentive head, and all those marketing head, right? So far we have discussed all about audit side. Let's come into the non-audit side, right? Assessing the fraud risk on other engagement. Preparation, you are not giving any assurance. Why you need to conduct fraud risk assessment? Not required. Compilation, no assurance, no fraud risk assessment required. Review engagement, you are giving limited assurance, right? So here you are required to assess the fraud risk. Attestation engagement, you are giving reasonable assurance for the specific subject matter, account balance and transaction. So around that you need to do the risk assessment for the subject matter.
I had a question. What was the difference between attestation engagement and examination engagement?
Examination engagement is part of attestation engagement.
Okay, so they are not different. It's just a subset of this attestation.
No, attestation is a broader term. In that we have three types of engagement.
Okay.
What are three types of engagement? Can anyone say?
Sir, agreed upon procedure.
Yes.
Review
Compilation.
compilation.
Oh my God. Don't tell me after
No,
two
no, no.
chapters you are saying
Compilation तो
compilation.
वैसे ही अलग है बिल्कुल.
No.
Ah,
Review engagement, agreed upon procedures, and examination. Yeah.
yes. Absolutely true.
What was the second one?
What was the second
Examination.
one? बार बार थोड़ी बोलते रहेंगे आयुष हम. संचित ने भी बोल दिया.
ऐसे वो जितने लोगों ने एक साथ बोला ना बीच का मिस ही हो गया कि क्या बोला गया.
Okay, so first is examination, second is review, and third is agreed upon procedure.
Okay.
So now let's jump into the question. We have 5 minutes to complete 3 questions, and then we are done for the day. Okay, which of the following is a valid statement? Which of the following is a valid statement with respect to auditor's responsibility for the fraud risk on the financial statement audit? So you're doing audit of financial statements, right? And what is your responsibility? The auditor must use professional judgment in assessing the fraud risk. The auditor is not required to assess the material misstatement due to fraud. The identification of the fraud risk factor indicate the existence of fraud risk. The auditor is not required to modify the detailed audit plan to address the fraud risk. What an auditor need to do?
So this first one will be the answer.
First
Why
one.
not second, third, and fourth?
So the auditor is required to assess the material misstatement due to fraud, and it says it's not required, so that's a false statement.
Yep.
The second is identification of a fraud risk factor indicates existence. No, it does not it indicates existence of fraud. It does not indicate existence of fraud. It leads us to, we need to discuss with our team and then reach a conclusion as to whether a fraud is actually there, or is there not any thing which management wants to tell to us that this is not a fraud and this is the reason we have these projections. And the auditor is not required, obviously, if he finds that there are some factors which may lead to fraud, we need to modify our audit plan. Like we need to get into more detail and adopt more substantive procedures, so that we can assess the risk. So the first is the logical answer, because auditor, he should use his professional judgment. Other three statements are not holding true.
Absolutely true. Make total sense.
Also, as a auditor responsibility, we are first to assess like the professional judgment, and then we would be identifying and seeing that we need to modify the audit plan or to we need to address the problem or address it. That would be the second step.
Yeah.
So as a first step of auditor responsibility, we need the professional judgment.
Yeah, absolutely true. Second question.
So the statement,
Yes, Kashish.
the statement itself is said that everything is in a perfect manner. Like auditor must be a professional judgment in assessing fraud risk.
Yeah. Any doubt, or you're just explaining this?
No, sir, explain.
Okay, second question of the day. According to AUC 240, consideration of fraud in financial statement audit, fraud risk factor may come to the auditor attention while performing the procedure related to what? Engagement planning, understanding of entity control, or conducting field work. When this can come into the attention of auditors? Anytime. or every time?
Anytime during these three options, yeah.
Yeah, anytime or every time.
Every time.
Right? So whether you are in planning stage, execution stage, or like doing internal controls testing at any point of time, if any risk of fraud come to your attention, you need to update your procedure and plan your procedure accordingly. Cool. Last question of the day. Which of the following CPA should not consider when he or she is assessing risk of material misstatement due to fraud? Which of the following CPA should not consider and why? The likelihood of the risk, that is the likelihood that it will result in a material misstatement in financial statement. Type of the risk that may exist, that is whether it involves fraudulent financial reporting or misappropriation of asset. The significance of the risk, that is whether it is of a magnitude that could lead to the result of possible material misstatement. The level of day-to-day involvement of the entity's audit committee.
It would be fourth one.
Huh?
So fourth would be the answer.
Why?
Correct answer would be fourth because it's first of all it's management's responsibility to preparation of financial statements and correctly reporting it and to ensure that the assets are not appropriated. Now in the first statement, all the three statements which are there, they are the factors or the things which auditor needs to consider in assessing the fraud risk. And
Yeah.
fourth is like audit committee is not directly involved in checking whether there is a fraud or not. Management only will go back to audit committee to tell if there has been such an happening and what further actions can be taken.
So the first we are talking about the likelihood and magnitude of the and that's what we are assessing. We are assessing the risk of statement. There is the fourth one is relevant to the overall like not in
Yeah. So call of the question is should not consider. So fourth one is completely outright because like day-to-day audit committee, management is also not dealing with audit committee day-to-day. Once in a quarter is more than enough for them. Right. So I think we are good and we are right on time. Luckily we covered before 2:05. So I think we are good for today and we'll continue this chapter tomorrow 10 a.m. and we all would be joining on Zoom tomorrow.
Sure.
Aye.
Cool. Enjoy rest of your
Sure, sir.
Saturday.
Thank you.
Yeah.
Thank
See
you,
you
sir.
tomorrow morning.
Thank you, sir. Thank you.
Bye.